I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure on here. Actively traded most of the names on this list today, and then added a skills position to the swing list, which I can talk about. Let me turn my video back on. Bam. All right. Wow, what a day. What a day. And it almost doesn't feel like it, right? SPYs here are up a whopping 1.4%. Qs here were up just under 0.25%. And then here is where the action is. Bam, IWM, 2.6%. How could you have known that the IWM is going to be so much stronger than the Qs today? By being in the virtual trading floor, because we spoke about it pre-market. Why? So we were looking at the TLT this morning. TLT was set to gap down pretty big into this kind of equilibrium area, possibly retest this 146, which was resistance that it broke out from. So it was a pretty sizable gap down, a bit over a percentage point. And you can see here on the 5-minute chart that the TLT actually rallied a bit throughout the day, which I think is actually why the Qs ended up closing on highs and ended up being not red on the day, but up 0.25%, is because probably the TLT was able to come back here a little bit from the lows that it was trading at pre-market. But basically, TLT down, interest rates higher, so we expect that that's going to lead to some relative strength for the IWM. We also discussed in the morning meeting when we were thinking about our game plan, degrees of extension, because the IWM is really not extended at all coming into today. And not only is it not extended, but we're expecting the relative strength to come into it. We discussed that 230 was the first big resistance level, and the area around 234 is the second big resistance level. I believe we clicked all-time highs today. What's this high? 234.53? What's this high today? Oh, I'm wrong. Not quite. About 30 cents away from all-time highs in the IWM as of today's high, which is basically today's close. But anyway, this is what we discussed in the morning meeting today. Looking for relative strength in the IWM because of the price action and interest rates combined with an understanding of extension. IWM not extended at all from the ADMA today, whereas the NASDAQ has been relatively strong for the second half of October. The big rally in the SPYs and the Qs. The IWM has not participated in that as much. So we had a little bit of extension, not major extension, but a bit of extension resulting from Friday's strength in the Qs. Yet, with all this said, all three of our indices are in bull market territory as we view them. So what we discussed in today's morning meeting was to be a little bit careful because the market for the S&P and the NASDAQ was slightly extended and we were gapping up. And also, we discussed in the morning meeting today to not really focus on big tech. And I know Tesla, right? This Tesla is like disgusting. The move in this, and I mean that obviously in a good way. The move in this from the $800 breakout of this ascending triangle that we had called out here as a team to 1,200 and change is it's like beyond anything that I've almost ever seen outside of Tesla. I mean, and obviously we've all seen stocks have huge rips, but when you think about the market cap of this stock and the movement that it's still having, it's mind-blowing. But even with Tesla's move today, I don't think that this was something that you should have focused on. Yeah, we did see some bullish option flow continue to hit in Tesla. That probably helped the strength here, but I think it was just a little bit too extended to be trading this today. Your entry here was on Thursday for continuation, this inside day and up for continuation, even though maybe you were nervous about that because even it was extended on the daily chart even then. And if you are, or you were, and you didn't take that trade, that's fine. It's okay to be cautious when you're looking at a market that's extended. But this move here in Tesla is insane. But besides Tesla, we were really on point today about avoiding big tech. You look at the price action in Apple today, very difficult. You look at the price action in Amazon today, very difficult. You look at Microsoft, difficult. You look at Google, difficult. And that is, even with the daily charts of Google and Microsoft, looking so strong. Microsoft actually just giving another inside day today. Apple's a little bit more wishy-washy inside day today. That earnings report, they initially gapped it down, but they brought it back up, back to 150. All the same. Today was the day to not focus on mega cap. Today was a day to look at these IWM names. And we spoke about, when I think of the IWM stocks, I think of value. But I also, it's interesting, I've spoken about this in the past, but it's been a while. When I think of the IWM names, which are a lot of small cap, mid cap type stocks, I think of a lot of stocks in sectors that we consider to be value. Like when I think of the IWM having relative strength, because interest rates are higher. What I think of is XLE acting strong, XLF acting strong, and that's kind of more in your value space. But I also think about stocks that are on the complete other end of the spectrum when I'm thinking about relative strength in the IWM. I'm thinking about your SoFis and your Palantirs and your Fubos and Plug, those types of stocks, which are like literally the opposite of value. These are some of the most speculative names that exist. But when these stocks were running back at the end of last year and the beginning of this year, there was a lot of money to be made, even as we recognized that these were bubble moves, right? I was saying it at the time. I was even saying it probably in the end of December, and then definitely was saying it at the end of January, beginning of February. Most of these stocks that were trading at these prices, like Plug at $75, these companies don't belong at those prices. This was a speculative bubble, and this is also why you guys have probably heard me say a lot that the real top of the market in a lot of ways was actually February of this year. And for these names, they had a bubble, and that bubble burst, and they came all the way back down. There are so many of these stocks that went back down from these highs 50 to 75%. I mean, Plug just happens to be the one that I have up in front of me right now. This Plug went from $75 to below 20, right? Just so many of these names just got absolutely destroyed, and now here it's staging a bounce again back to 40. But we know that these speculative stocks, I like trading them. They are the definition of momentum stocks. When you can find those breakouts, when the volume's coming in and the option flow's coming in, they can give you some killer moves. But they're also priced cheap enough that you can potentially take a lot of size in them. So that's what I like to trade. And we had some great call-outs in the morning meeting today. Some of them were my call-outs. Some of them were call-outs from the team here in the virtual trading floor. But after we had our big picture game plan today, and we were really looking for the IWM to have its strength, we tried to narrow it down to, okay, well what stocks can we look at? So SoFi, right? SoFi was one that was brought up by, I think, one of you guys. And I remember saying, wow, even though I'm in this, I don't know why it's capping up so big, and I probably should have mentioned it myself in the morning meeting. One of you guys did. I loved the idea of being long SoFi today versus yesterday's high. Yesterday's high, Friday's high, was $20.16. And this is one that I called out in real time when it pulled back here to below 2050. It was in the 2030s. I actually had a bid to add even more stock at 2026. Low of the day today is 2028. But I called this out, when it dipped to, 2040 as a buy versus yesterday's high, and that the risk reward now at these prices was great. So I hope some traders on the team are able to slip into this because the follow through was fantastic. We mentioned in the morning meeting that if it can clear the $21 resistance at this point, based on what this daily chart looks like, we could probably get some big upside follow through. And you can see here, $21 is kind of being clear resistance from the last big run that it had a good technical pullback, followed by 2 inside days in a row into this $20 area, and a big gap up this morning. Even pre-market, it was trading as high as pre-market, it was trading at 2080 at one point, I think, or 2075 maybe. And my concern was that they were going to gap this up so much that they weren't going to give us a good risk-reward entry. But the opening, little pullback from this tail gave a great opportunity to be able to buy stock versus yesterday's high. So I was able to call that one out in real time. So that was solid. Another one that was not my idea, I think Mark brought this up in the VTF, was the skills. Got in this skills, was able to make some money on it. I don't like this company. And I'll talk about another stock today that I called out myself in the morning meeting that I also don't like the company, but it worked out well. I'm really not a big fan of what this company does. But you can't not like the pattern. We had discussed the skills here, breaking out of kind of this base down here, and it's given a nice move. This was like a nice 4-day move here where it got pretty extended. And what do stocks do when they get extended? We want them to have time or price corrections so that they can reset up. Well, guess what? It went sideways for 3 days. Let this ADMA catch up. That's your reset up. So basically, this is a bullish consolidation. Bullish consolidations tend to continue when the ADMA catches up to the base. That was coinciding with an inside day right at the end of the consolidation. You guys know I love that when you have like a bull flag pattern or a bullish consolidation pattern that tightens up as the ADMA is catching up and then gives you that inside day. The inside day and up in that situation, you can utilize that as an entry. So we discussed $11.64 as an entry. I think I got $11.66 as my entry. Actually, you know what? I didn't. I got $11.56. I kind of cheated a little bit on this. My entry was $11.56. So, $11.64 was the technical entry based on the daily chart. I cheated a little bit because of this opening volume, which, cheating can go both ways. Sometimes you end up losing money in a trade that you never would have gotten into. And sometimes, you get an even better risk reward because you cheated. If you are going to cheat on a trade like this, you really want to make sure that the other confirming factors that we like to look for, such as volume and option flow, are there. And I don't think we saw any option flow, but the volume was definitely there. So that's kind of what got me to cheat on this at 11.56. Originally, stop loss was actually going to be the gap fill with the idea that I could raise my stop to the low probably pretty quickly once the ADMA and the 5-minute catches up. So that's what I was able to do once it's caught up. And then that gave a decent move. Sold out here a little bit above 12. So I kept a little bit overnight. Not too much. I sold some right into the close because I wanted a little bit of a bigger day, a little bit of a bigger close. Some of the other stocks, like a Fubo or a SoFi, the moves, and there's a whole bunch of them, the moves were so huge. And this one wasn't a move to 13 or 14 bucks today, but it was still good enough based on the price I had or the amount of money I booked for me to add a little bit to a swing position. So that's skills. Speaking of stocks I don't like very much, let me bring up this coin real quick. One of the things I mentioned in the morning meeting was, I really don't like this company. I think I've laid out my bearish thesis, my bearish, qualitative fundamental thesis on coin enough times in the past. I don't need to do it now. But what I said was, you could take that and throw it in the garbage because look how bullish these technicals look. They look phenomenally bullish. It's cleared out above pretty much all resistance at this point, except for resistance that might be from like literally the IPO day or like a couple days after. So it's cleared out of almost all resistances at this point, built out a bullish consolidation, and once again, what do I love when I get at the end of a bull pattern, right? This is a bullish symmetrical pennant. I love when the ADMA is caught up to that price action and you get a tighter inside day at the end to be able to execute off of. So one of my ideas for the morning meeting today, even though I really don't like this company, was to look to buy coin through 326.50, basically Friday's high. And guess what? Boom, right through 326.50. Your stop loss would have to be the low of the day. So you're taking on $2.50 or so worth of risk on this. You got to make sure it's appropriate for you. I don't really like trading these $300 names that are not super liquid personally. But it gave, a great initial move, and then it kind of rolled over a little bit more than you would like. So, same thing for me, like with the skills. I sold some at the close. I'm not swinging it too heavy. My profit cushion's okay. Same thing with this. If you took this coin today, you really didn't get the close that you wanted. You probably would have wanted to close at 334 or better if your price was the price that we discussed, which is like the 326.50, to feel confident to really be able to keep this overnight. This thing at a 331.50 close could easily gap down, to your stop loss on this thing tomorrow, which is, you always want to be holding overnights from a position of strength, right, from a win-win situation. So it didn't close phenomenally well, but was still a good trade and, possibly worth swinging a smaller percentage of your position if you have a good price and you're able to book enough on the way up. I mean, today was really all about the speculative stocks, right? One of the traders in the VTF, I think it was Will, called out Fuel Cell. I looked at that one and I said, you know what? I like Plug a lot, but the issue with Plug here is it's gapping up too big. So I didn't want to come in and chase this Plug. If I was buying Plug at the open, I felt I would have had to give it all the way down to yesterday's low, which is 38.49. I didn't want to, take over $1 risk in, a $40 stock, even though we know this one could be a mover. But when Will brought up Fuel Cell in the morning meeting, this one wasn't too bad. You could have been long Fuel Cell. I think we spoke versus $8 initially. So you had to buy this one pretty much right away. Opened at about 8.25 or so, but really nice move. So again, all these speculative stocks just completely running. Like, look at what Fubo did today. Fubo actually, I didn't look at this morning, unfortunately, because this is like a great breakaway gap type trade above $30. We did bring up the 3D printing names a little bit. What I said very specifically, someone again on the team brought up this Triple D. This thing has been in a consolidation for a while, and it's got 2 inside days here at the end of this consolidation. I don't love that. If you trade every inside day within the confines of a bigger picture consolidation, you're going to lose money in the long run. We want to generally be trading inside bars, inside candles, inside days, regardless of the time frame. We want to be, executing on these inside candles when we have either trend or momentum. Well, when you're in a consolidation, you have neither trend nor momentum. But what I said to the person who brought this up was, first of all, we know like some sister companies like SSYS have been completely running. We expected that these speculative names could catch a bid today. Don't just come in and blindly buy this just because it's breaking up above yesterday's high, right? It's not enough. You need to have the other confirming factors that we want to see tell you that this thing is coming in play in order to actually take the trade. And again, what are those confirming factors that we are really looking for? Unusual volume and or option activity. And look at the volume off the open here in Triple D. Just massive compared to typical. Right? Look at yesterday. Right? Look at these bars today. The opening bar is like more than double Friday's opening bar. Even the second bar of the day, significantly larger than even the opening candle from Friday. Look at the consistency of the volume that's here. That's what you want to see. That consistency of volume to tell you that the stock is in play. Unusually large volume. And then, okay, now we got something here. Maybe that volume is the key that this is able to actually break out of its range. You could have waited for $29, which was the resistance level. Or, if you recognize the volume, you could have just been buying this thing right through yesterday's high. Again, specifically because of the volume. And also, obviously, phenomenal trade there in Triple D. So speculative names are on fire today. Another call out that I had for the team this morning that worked out pretty well, I ended up not getting involved in it, was Shake Shack. And this was specifically because Shake Shack got upgraded. This thing has been in a descending channel for a long time. You got to be very careful buying stocks that are in descending channels like this. But I like this company. I have a bias towards it, which I think it's okay to have a fundamental bias, a qualitative fundamental bias on a company, as long as you don't act on it without confirmation from the market. So for me, that helps to give me some conviction. So I kind of have a little bit of a bias on Shake Shack, like the company a lot. This is another one that was part of the speculative bubble back in February. Even though it's a very different type of stock, it's still considered like a growth story. So this thing was trading at $132 or so back here in February, when in a lot of ways the market topped out, and this thing's just been grinding lower in this descending channel. Has given almost a 50% pullback to yesterday's low, to Friday's low, and then it caught this upgrade. So I'm like, maybe this upgrade could be the catalyst that breaks this descending channel. And if the descending channel is able to break, maybe you're looking at a move back to the $80 to $88 area. And I don't think we have confirmation that it broke the channel today. It just got to kind of the upper band of it and is retesting the 21 EMA. But it's a solid day one on good-looking volume. And, if anybody was able to get involved in this thing early, this is something that you would want to swing a percentage of your position, because if it breaks this channel, you're probably looking at, pretty good continuation here to those levels that we just discussed. 80 to maybe even like this $86 level or so. So again, I think an awesome day here for the team. The big picture game plan was on point. This is why we do this, right? We start with the big picture game plan, then we work our way down to the smaller picture, the individual stocks that you want to focus on. The way that you are able to capture and know to pay attention to these speculative stocks today was to have an understanding of the big picture game plan, to have an understanding of degrees of extension from the different indices, and to have an understanding of how interest rates play a role in the relative strength and relative weakness of the market that we're in. And if you kind of followed that formula, if you chose to avoid the Microsofts and the Apples of the world today, that's where the tough money was, because a lot of these other things gave huge moves, and honestly the money on them was really easy. You just had to press a button and be involved. So that's all I got. Happy to take a look at any questions. The first question I'm just seeing here, even though I haven't scrolled to the top yet, is just from Chinggis. It's a general question, so let me just answer it really quick. When I say, the question is, when you say versus yesterday's high, do you mean a stop loss? Yes. Yeah. If you're going long versus an area, versus is basically what your stop loss is going to be. Okay, cool. So scrolling up here in the VTF to try to find some questions. I'm going to go back to about 410 or so. I see there's a lot of information you guys populated about companies that reported earnings here after the close. That's great. First question I'm seeing is from Steve here. IWM affects what kind of stock? So I just kind of went over that. So IWM is composed of small caps and mid caps. I think that actually the biggest stock in the IWM is AMC, believe it or not. But again, this is what I was speaking about in the meeting. When I'm thinking about the IWM, it's interesting because I'm thinking about like almost two different extremes in the market. I'm thinking about a lot of value type names that gets relative strength. A lot of times when the IWM gets relative strength, but it's also a lot of these speculative small cap and mid cap stocks that gain a lot of strength when the IWM gets strength. Robert here asking about Qualcomm. My game plan on Qualcomm today was to go long above yesterday's high, 138.68. First time we broke the high was at 935. There was no signal, and it was a big risk for me. But would you call as a valid trade at 130 pullback or 215 retest with an intraday stop loss level? Okay, so let's take a look here. So what did you say the 130 break of high is about? 130 or 215 retest. Okay. And you wanted to buy through the break of yesterday's high. All right. Yeah, so my feedback on this on you, and I know you brought Qualcomm up in the morning meeting today. The first thing I would say is I actually don't love this pattern. I don't dislike it. You have a very clear resistance. You have a very clear support. It is tradable, but the reason why I don't love it is I don't know whether I would classify this as a bullish consolidation or a bearish consolidation, right? Because look what the stock has done. First of all, it's a consolidation within a bigger consolidation. I generally don't love that. And is it a bullish consolidation because it's coming off of this October low where it's shown some strength, and if it is able to start breaking above 134, that could be where your continuation comes from? Or is this a bearish consolidation? The market just bounced back here to this 134, which we know is previous resistance from when it was breaking down. So it bounced back after working its way lower. So again, multiple reasons why I don't love the pattern. One is the consolidation within bigger consolidation, and two is I struggle to classify this as a bullish consolidation or bearish consolidation based on the recent price action from the last 2 months or so. So if you combine that with the fact that I was also expecting tech to be relatively weak today, I'm probably not looking to go to Qualcomm. That would be the first thing I would say to you just from a big picture. Now secondarily, all right, you're taking the trade no matter what. You game planned it. It's one of your ideas of the day. Fine. And again, like I said, when you're dealing with a more neutral consolidation like this, it could be a long above 134, or it also could be a short below. Downside of it's a little bit sloppier, like 131 or so, something like that. As far as execution goes, Yeah, it's tough, and I see why you didn't want to buy it the first time it broke, because it had 3 big upside candles in a row, and the only stop loss you really could have used, actually there's 2, you could have used the low of the day, or you could have used the second bar low because it's an inside 5 kind of continuation there with a little bit of a pivot point, and then the stock is making new highs. So you could have used either of those. If you used the second one, you would have gotten stopped out. If you used the low of the day, you wouldn't have. So I understand seeing this. I do this all the time, by the way. Like a teledoc. Teledoc was the one idea I had today that, you know, wasn't fantastic. First of all, it never actually triggered. The idea in teledoc was to buy it above yesterday's high. So it never actually triggered the entry. But, you know, when we were typing up all these stocks after the market opened and we're going through all these speculative names, I'm going through all the stocks that I called out in the morning meeting, I'm going through the stocks that you called out in the morning meeting, and I'm trying to see what we like. I'm looking at this teledoc, and, you know, I'm looking at this volume on the second bar. I'm looking at the lack of pickup of volume on the third bar. You know, you get the continuation here off the opening move on this third bar. I'm like, you know what? The market's being really strong. I do like this daily chart. That's why I was on my list today. But I'm not taking this. And I said that out loud here to the team. I was like, I'm not taking this teledoc. It's just I really don't love the price action on it, especially when so many other things look so good right now. So that's basically exactly what you did here in QCOM. You were like, you know what, QCOM was in my game plan this morning, and it's getting up to the level that I wanted to buy, but I don't like this price action. Volume's not there. The risk reward is no good for me. I don't want to get involved in it. So this all leads to your question of, well, can I try it here, you know, at, you know, between like whatever 1 and 230 when it was breaking those highs again for a potential trade. I don't love it. I'm not going to say no. You know, first of all, my favorite trades are always happening in the beginning of the day because I have the whole day for them to play out. And that's when the most amount of momentum is. The thing I would say about, you know, taking this trade at 130 or 115 or whatever is that you kind of have an even lower probability of success, right? When we look at all of our layers of probability, one of those layers is time of day. And we know that the time of day with the lowest probability of success in any trades is between 11 and 2. So, okay, this just you're looking at, you know, the time here between 1:30 and 2:15. You're basically in the lowest probability time of the day when we already know that the NASDAQ is relatively weak. There's no fantastic volume coming in. So I don't love the idea of going to it here in the afternoon. I would really need to, like, again, it's not like I don't ever take new trades midday. I'm just very selective when I'm taking those trades midday. I really got to be seeing that something's happening here, or that something's happening with the entire market. Otherwise, I'm doing very little trade initiation on that midday time point. So you just have multiple things against you. The volume's not here. The time of day is not good. You know, tech is showing relative weakness. So that's my feedback for you there, Robert. Cool. Got Colin here posting all these stocks that traded on earnings here after hours. A whole ton of them. Thanks for the information, Colin. Brandon giving me a compliment on the SoFi call out. Thank you, Brandon. Still scrolling through here. Next I am seeing is from Marty on YouTube. Cheers, Derrick and the team. 1, Patrick has superb technical analysis. Spot on. Yeah, Pat's awesome. Maybe I should go on vacation more. That way you guys can get a little flavor of Pat once in a while. I think it's good to mix it up. You know, I've said this in the past. Not to get on too much of a tangent. I've said this in the past. I'm a big believer in learning from as many resources as possible. I'm obviously biased towards what we're doing here in the ProDesk virtual trading floor. I'm obviously biased to thinking that, you know, the educational content that I provide is really good. But I really don't think that you should solely learn from me. Happy to be the primary person that most of you guys learn from, but I didn't learn from one person. I learned from many, many different resources and a whole bunch of different people over the course of my career. And I put together all of the pieces of information that I learned from as many people as I could in a way that made sense to me into my brain, and then try to create rules around everything to breed that consistency. So that's what I really recommend. So it's awesome when we can get Pat in here to do those meetings, even if he may or may not have forgotten to do some of the things he was supposed to do. Pat, it's awesome when we're able to get him in here to give you guys a little bit of a different look, because again, Pat, I would think would say that I've been probably the number one resource to his career, but without a doubt, he's learned from so much more than just me. And that's why he implements so many different things than me. He looks at different moving averages. If you read Pat's note, he's looking at Ichimoto clouds, looking at Bollinger Bands, and he's chatting about the RSI with you guys on the VTF in the afternoon today. I don't really look at those in the way that he does. So it's awesome to get different flavors from different people, and then put together what would make sense for you. So that's your first comment. Your second comment is that the team inspires you to re-enter the institutional desk trading again, but taking the exams, taking the exams is a hassle. But look, if you've had the 7 in the past, I don't think you'll have too much of a problem. You have to take the SIE and the Series 57 to become a professional trader at T3 Trading Group. The SIE is a pretty easy, broad examination. The Series 57 is a little bit more difficult. I kind of liken it to a Series 7 Lite. So, Marty, I think you got my email address. Just shoot me an email, theoldensmith@t3trading.com if you want to chat about the requirements to join T3. Next here is from another person, YouTube, Jernej Ravbar. I apologize if I did not pronounce your name correctly. Saying I bought Hewlett-Packard for a swing today. Wow. Usually not a stock that I go to, but this HPQ looks great. Looks great. You got a big resistance level here around $31. You got a big resistance here around $31. And you had a bullish consolidation pattern right in front of it. I think people on the team have heard me in the past say I love when you get tighter upper level consolidations within the confines of bigger level consolidations, because it's a chart pattern that sets you up for a breakout. And that's exactly what you have here on this HPQ. Really good looking pattern here in front of the $31 resistance. Could enable you to get involved in it. I think it looks great for a swing trade with today's close above $31. Though, of course, make sure you have a good game plan in for risk management. Sebastian asking about LVS. I know Rock Kira on the VTF earlier was saying that he's in both LVS and was stalking MGM, but I don't know if he ever got into it. MGM has just kind of still been consolidating this bull flag, but it looks really good. And LVS looks really good too. I know some of the guys on the team had a great trade in this back on October 11th, and it's kind of stalled out since then. But today was a great wake-up candle, back up to that resistance. I do wish this volume was a little bit bigger, but I think that LVS is looking pretty good. Maybe there's a trade there for the break of 41 tomorrow, because it's honestly not too extended. 41's kind of become the next level. All right, next here from Mike. I think the cruises broke the descending channel. Really need to see some more closes at the level, but in my opinion, cruises never quite got the same rebound from COVID that just about every other sector did. All three will be on my radar. Sure. So we spoke about the cruise names this morning in the morning meeting a little bit. I always caveat things with my personal biases. There's definitely stocks and sectors that I'm biased towards, and stocks and sectors that I'm biased against. And the cruises are one that I tend to be biased against. CCL, RCL, NCLH. I mentioned that I liked RCL and NCLH best, and CCL not as much. I mentioned that we want to see RCL give a close above, what did I say, 87? Something like that. Well, either way, you got to close above it for that RCL. And for NCLH, same thing. You really got the close here at 27 that you want to see. So it's a really good day one, where these things can start to be setting up to break out. Broadly, I do think that these charts are really sloppy. I think that they haven't recovered from COVID in the same way most other things have, for a reason. I think a lot of people are still avoiding being involved on cruises. But today was, without a doubt, a great initial wake-up day for these types of stocks, and it's something that you can keep on the radar for continuation. Next here from Jerry. In hindsight, today was a day to be aggressive at the open, but the big picture plan was to be cautious long, at least in the SPY. Yeah, well, I would say to be cautious long, at least or especially with the NASDAQ. Are those aggressive buy days generally most common on big gap downs after significant selling in a bull market? Sure. This is a great question here from Jerry. Let me kind of restate the question a little bit. So I guess as Jerry is aware, and I want to work on putting a video together on this, I have, this is actually part of my training program as well, but I never actually made the video class on it, so I need to do that. I have a list of, I think, 8 big picture themes that are really important for people to think about and pay attention to in order to be a successful trader. One of those big picture themes is knowing when to be passive and knowing when to be aggressive when it comes to the market. And this is a difficult one because another one of the big picture themes is to be consistent, because the only way that you can be consistently profitable is by doing things consistently with the market. And that sounds so obvious, but it's true. And the only way that you can do things consistently with the market is by having rules that enable you to be consistent. So this has always been kind of one of those trickier ones, because I got one theme that says you want to approach the market as consistently as possible, which that should probably mean trade every day the same. But I got another one of my big picture themes that says know when to be aggressive and know when to be passive. So they almost seem like they are opposites, right? They almost seem like they are opposing each other. But my counter to my own argument here would be that part of having a rules-based approach to be consistently profitable is to have rules that govern whether you should be aggressive or whether you should be passive in regards to the market, because not every trading session is created equal. There are certain trading sessions when there is just a ton of opportunity that's out there and you need to be really aggressive or you're never going to make money in this business. And there's going to be a lot of other trading sessions where there's not a lot of opportunity. You're looking at the market and the market's really in a difficult spot. It's a coin flip, are we going up or down? And based on that, you want to be as passive as possible. And of course, we all want every day to be the day where there's a ton of opportunity and we can be really aggressive because it's, well, that's how you make money, right? And it's also a heck of a lot more fun than sitting on your hands and being super selective and not doing a bunch of trading. So you need to know when to be aggressive, when to be passive, and have rules on that. So coming back to Jerry's question here, it's kind of a broad question on, well, you know, what are some things I can look at or think about that can help me understand if today is a day to be aggressive or passive? But he's saying here, I think I needed to be cautious because the SPYs, and I think it's a better argument if you use the Qs, but he's saying the SPYs were set to open up in extended territory, you know. One of the things I said in the morning meeting today is, you know what, yeah, SPYs here are a little bit extended, but I really didn't think that they were so extended that we couldn't continue. Though I don't like, even when you have smaller degrees of extension, I don't like chasing gap ups in even smaller degrees of extension. And it wasn't a huge gap up, I think it was like 0.25%, but it was still, you know, it was still a gap up in a market that had a big day on Friday. But we're only trading it at like 460 or so with the ADMA at like 465. You know, we're extended by $5 in a $460 ETF. So I would say with the SPYs that they weren't so extended to not buy. You know, definitely recognize that it's a gap up and that, you know, you want to see how like any short-term extension especially handles that gap up. And look what the SPYs did too, right? They totally filled the common gap. They were very weak. If you bought the SPYs at the open, you were not having a good time by 10 a.m. But if you were buying, again, any of those speculative stocks, you know, like look at the first bar of the day in SoFi, look at the first bar of the day in Fubo, look at the first bar of the day in Skills, you know, all these stocks that we kind of had on our radar today, they were all massive. You especially, I think, I know you mentioned SPYs, I think you needed to be especially cautious about the Qs today, because even though the SPYs are a little bit extended, the Qs are even more extended. And we also would have expected the Qs to be relatively weak today because of the price action on the TLT. So, again, I'm just providing a lot of information right now. Let me try to just a little bit more directly answer your question. So the question that Jerry has here is, well, is there a rule, is there a formula I can have for myself to know when to be aggressive or not? Like, are those days, and this is the direct question that you're asking me, are those aggressive buy days generally most common on big gap downs after significant selling in a bull market, or, and I know you don't say this continued part, but or like a gap up like today? And I think the answer is it can actually be either, and it really depends upon all of the other information on kind of what the market is doing. Like, sometimes you can be really aggressive into a gap up, like if it's a breakaway gap as an example. If the whole market's doing a breakaway gap to the upside and it wasn't too extended going into that breakaway gap, that's a day where you could be super aggressive. Another day where you could be super aggressive is if you're overall, and we really didn't actually get this on this dip here in September and beginning of October, but if you have an overall bull market and then the market off of that has a very sharp corrective period where it goes down 10-15% or something like that, maybe it tests a 200-day, something like that, and then you have like that large degree of extension, that can also be a signal that today is a day where the whole market is in play and we can look to be super aggressive. So I think it is situation dependent. I don't think that you can have just one specific rule of, I want to be more aggressive on gap downs in bull markets than gaps ups in bull market, because it depends on the type of the gap, the location of the gap, and the degrees of extension. And if you looked at the SPYs today, especially if you looked at the Qs today, and you looked at the price action, your thought process, based on what the TLT was doing and the fact that they were slightly extended, had big gap ups, your thought process to be cautious this morning was perfectly on point. Perfectly on point. If you were trading anything that was heavily correlated to the S&P or heavily correlated to the NASDAQ in the beginning of the day today, or really at any point in the entire day, it was a really difficult money. But you also need to be flexible. We thought that the IWM could be strong today because it didn't have that degree of extension. We thought the IWM could be strong today because of the TLT, and then we very quickly got our confirmation when we saw the volume coming in on all those things. So even if your game plan was, let me be passive today, you got to recognize when some of these speculative stocks were breaking out on huge volume, I got to participate in this. I got to try to sneak into some skills. I got to try to sneak into some SoFi. I got to sneak into some fuel cell, or there's plenty of other ones, right? That 3D printing, triple D that got brought up. So that would be the answer to your question. Sonny asking about Meta. So this is the Metaverse ETF. I've never heard of this until like literally this morning. Look at the volume these last 3 days. It's been huge. Looks like it's breaking out on the daily. I have no feedback for you on this Meta, unfortunately. I don't even know what it's composed of. But what we can do is we can take a quick look at it as a group here to see what the holdings are of Meta, because I've got no idea. I'd never even heard of this ETF until this morning. What does it usually say the holdings? Isn't it usually right in here? Top holdings? In holdings? You would think so, right? That's stocks. Hold on. Profile? I know there's an area here somewhere where in Yahoo Finance where it tells you what it's composed of. Unless I'm just totally losing my mind. Profile, maybe? I click on that already? That's interesting. Let me try this with XLF. Yeah, holdings. Tells you the top 10 holdings. Did it not do that for Meta? Or did I just not scroll down far enough? Oh, interesting. That's weird. So usually when you go to Yahoo Finance, it's just like a simple go-to resource if you want to know what the holdings are of any ETF. I know someone was even asking me about the holdings in the IWM today I think at some point during the trading session. Usually you can go to holdings and it'll list the top 10. Okay, AMC is the number 1 holding of the IWM right now. NTLA number 2, Crocs number 3, etc. I don't like that this meta. So I'm trying to give you feedback on this meta because it's your question. I can't give you any feedback because I don't even know what it's composed of. Yeah, sure, the daily chart looks good. It's breaking out. I think I would rather be involved in individual stocks at this point if you're looking for metaverse plays than a metaverse ETF that I can't even figure out what it's composed of. Obviously, Facebook has been the chatter. And I read today that an analyst actually stole what I had to say because I was already saying that I think that Roblox is a better meta play than Facebook. Facebook's just too dirty, but they do have all the money. So look for Facebook to buy somebody out. Watch Facebook come in and buy like a Fortnite or even a Roblox, something like that, to start giving them a heads up in the space. I really think Facebook is going to need to make some sort of big acquisition. I mean, obviously, Zuckerberg is going all in on this metaverse thesis. I don't disagree with him on the thesis. We know that Facebook has all the money in the world to be able to execute that as well. I just think in order to execute, they're going to need to buy somebody out. So I don't have too much of an opinion for you on Meta. I do like Roblox, but Roblox, again, we discussed Roblox in the morning meeting today. This Roblox is into this resistance zone where it's been constantly failing. We need to see Roblox get above $84 on volume and close above. I do not like that on a day where all the speculative names caught huge bids that this Roblox went down all day and was negative. I know somebody was calling out a Roblox trade here off like this candle, like this big tail with the inside bar for an inside bar and up type of pattern. I don't hate it. I just was asking myself, why is this thing so relatively weak? Every single speculative stock I'm looking at is giving these huge upside initial candles, and this thing is just disgusting. Like, I was just like, why? I'm not going to go to this. I want to see this clearing above $84 on volume, giving a close up there, and disappointed today. So that's the best I got for you, Sonny, on Meta. I hope it helps. Pete saying has got no sound. You got to restart the VTF. There's people who think they're buying Facebook and think the ticker changed. Thanks, Charlie. Charlie providing a link here into the VTF with the Meta holdings. Here we are. NVIDIA is number 1. So NVIDIA is just a play on the... I guess I can't even look at this. All right. Yeah, NVIDIA is just a play on the hardware necessary for it. Roblox is number 2. Facebook is number 3. Microsoft, interesting. I mean, this just looks like an ETF of big tech. Apple's 3.5%. Tencent's 4%. Amazon's 4%. I mean, sure, Apple and Amazon have the ability to get into the metaverse if they want to. But what does Adobe have to do with the metaverse? Yeah, I don't know. I'm not in love with what I'm looking at here on the metaverse holdings. I think you're better off going after the individual plays, the individual stocks that are metaverse plays. Thanks, Charlie. Cool. Yeah, Roblox had that 3-day outage, but it's still, at least pre-market, wasn't getting hurt by it. Okay, cool. It's 5 o'clock. It looks like I got through all the questions today. So awesome stuff, gang. We were super on point with today's trading session. I love it. A lot of you guys did really well today. A lot of guys put up some solid numbers. I know I did. So let's keep up this momentum. I mean, this entire, since the second half of October as a team, we've been on fire. So let's keep it up. I'll see everybody tomorrow morning. Have a great night.